Hi, everyone. This is Stacy Woods with Compass in the San Francisco Bay Area. I just got back from a national conference that was virtual, and it was so interesting to get some of these very important data points from this kind of time during the pandemic and how it's affected us as consumers as well as the housing market. So I have 11 slides. I promise they'll be quick. I promise it'll be really helpful for you to understand kind of where we are and where we're going. So the first piece is really interesting. This looks like a very extreme slide, but this is consumer spending. So the US as a whole, we have not been spending money during this pandemic. Now, a lot of the fact for good portion of our population is you don't know if there'll be another shutdown. You don't know if you'll have work. Why would you spend the money? But another portion are people that would be spending on leisure activities, going to restaurants, going to theme parks, going to concerts. We're not spending money on those things. So as you can see, it took a steep decline for us in California. That was mid-March where we were confined to our homes. But as you can see, we're coming into the fall months. Lots of states and counties are now opening up, and people are figuring out how they will be interacting with society with this kind of new normal that we have. The next piece, slide, I did not expect. This is the average US FICO score. So this is your borrower score. This is a good number. And look at this. I mean, it's not like people were putting everything on their credit cards and not paying it off during the pandemic. So this is a very encouraging number. And again, this kind of goes hand in hand with the next piece, which we're going to be talking with a little later, which is people who are now seeing homes as their sanctuary, and that's where they're putting their money and investing. Stimulus checks. So those that applied for stimulus checks, it was actually a pretty even breakdown. It was very encouraging to see so many people put it either towards their debt very responsibly or pocket the money. And again, another portion spent the money likely on bills and groceries, which it was intended for. Now, this is another very interesting slide. So business applications in the US on the rise during a pandemic. You know, we're confined to our homes, we're having to change our way of life, and this really shows the remarkable entrepreneurial spirit of our country. So again, this is a very tragic time, it is a pandemic, but this is really interesting data about business applications. There's a, somewhat of a renaissance going on. So this will be interesting to see what comes of it. Housing Market Recovery Index, I just wanted to include this as a visual. This again was before we knew, this is February 1st as a baseline, before we knew life as we know it would change. Again, the first couple months, we didn't know how we were going to do business as a real estate community, especially in California. And the first week, I remember actually the first day during the shutdown, I had a mobile notary for my client. And we're like, are you going to come meet us? And, that's the thing. We always figure our industry is so innovative. We're always finding ways to move this economy along. And this has been a big piece to this recovery is demand continuing there, buyers being committed to their purchase. And again, the other piece is upward pressure on pricing is not having enough people moving. And then of course, time on market, this is a national level, we're still seeing things move in our Bay Area. It's a week to 2 weeks if it's priced and marketed appropriately, but we're still seeing things move on a normal timeline. And for some, it's accelerated. The home price appreciation. So all these groups spend every waking hour trying to figure out where the housing market's going. And so this is where they have all come in on their numbers for appreciation. So modest appreciation. But as you can see, I love that they put this slide in here because at the beginning of the pandemic, we had no clue what was going to happen. I mean, stock market changing, people not knowing if they're going to be able to work or not. So this has been very encouraging to see the 12-month forecast, projected to be positive. Now, the Mortgage Relief Act, so this went into effect right at the onset of the pandemic, right at the onset of all these government shutdowns. So as of September 22nd, 41% have removed themselves. So at the onset of the pandemic, you could go in and reach out to your bank, click on a button, and apply to basically delay your payments. And now we're seeing people who are either self-selecting out, recognizing, hey, I just did that for an insurance plan, but it looks like I'm able to still make my payments. Some paid the mortgage off, so that's huge. That means there is no debt, and they're just paying property taxes. There will be distressed sales for sure because of this. No one could have predicted our world to change, and for many people who maybe overextended themselves or have fallen on hard times, this will be a real thing. But again, it's pretty much peanuts, very small amount. Others that have continued, and again, for many, especially if you're in a 2-income household and one person is not able to make the payments, it's an insurance policy that the Fed put in place to keep us afloat. So this visual percentage of overall forbearances as a country is decreasing. This is from May to October. The number of active forbearances, this is just week by week. And again, this is, as we hit kind of a huge virus outbreak, we're seeing people figuring out how they're going to operate in society. And again, we're coming into the fall where people are, somewhat confident in how they will be able to work during the pandemic. The last slide is really interesting. So this is a US as a whole. Builder confidence sets a record. So at the beginning of the year, pretty level. At the onset of the pandemic, their confidence was not high. How could it be? No one could have predicted something like this. But as you can see, the emphasis of the consumer is on the home. So why wouldn't builder confidence set a record high, especially in areas that are less densely populated, which means there's land to build on. And in addition to that, lumber costs are at an all-time high. And so again, it's going to be a little more expensive to buy a home because materials are costing more, but this is really great to see for us as a nation, builder confidence at a record high. So I hope you find that information helpful. I will have a specific California breakdown for you as well, as that probably applies to us as a state, but this I think was really helpful to see for the US as a whole. So thank you again for tuning in, and I hope you have a great weekend ahead. Take care. Bye.